AI models are becoming so large and so power hungry that NVIDIA's next bottleneck might not be GPUs anymore. It may be memory. Right now, the AI industry is entering a new arms race around HBM, advanced packaging, and memory bandwidth. And some companies are quietly becoming critical to the entire ecosystem. First, the AI industry ran into power bottlenecks, then networking bottlenecks, and now memory may be becoming the next major constraint. So in this video, we're going to break down why AI suddenly needs massive amounts of high bandwidth memory, why advanced packaging is becoming one of the biggest bottlenecks in semiconductors, and a few companies connected to the AI memory ecosystem that could potentially benefit if this trend continues. But first, let's look at where the industry is heading. For years, most people thought AI scaling was mostly about compute, more GPUs, more processing power, more data centers. But AI models are becoming increasingly memory hungry as well. Modern researching models, AI copilots, autonomous systems, and video generation models and reasoning models are processing enormous amounts of data simultaneously. And every new generation of AI models is consuming exponentially more memory bandwidth. That's becoming one of the biggest hidden problems in AI industry. Because even the most powerful GPUs can become bottlenecked if it cannot access memory fast enough. Think of it like a supercar connected to a tiny fuel line. The engine may be incredibly powerful, but it cannot reach full performance if the fuel is not arriving fast enough. That is essentially what happens when GPUs run out of memory bandwidth. And this issue is becoming more important as NVIDIA's Blackwell systems continue increasing performance requirements across AI infrastructure. Some modern AI systems are now moving terabytes of data every second. That is forcing hyperscalers and semiconductor companies to completely rethink memory architecture. And this is why high bandwidth memory, or HBM, is becoming one of the most important technologies in AI infrastructure.
Well, HBM stands for high bandwidth memory. And the first thing that you could see is different from normal memories is that we've gone 3D. We're stacking chips on top of each other. So we actually are going up, not just across the XY dimension. This really changes everything because now we have silicon to silicon interfaces. When we use silicon to silicon interfaces, we can use very, very high density interconnect. GDDR5 is narrow and fast. HBM is wide and slow. Compare the bandwidths, massive delta in bandwidth, 4x, because we've basically gone very, very wide. When we combine the memory with our SoC, we're going to place it also on a piece of silicon, which allows us to move everything very, very close together. And we get two effects. One, we get power. Power reduces radically. The second thing is we moved everything very close, so now we can build very, very small form factor devices. So we have low power, small form factor, and this allows us to build things that really have never been done before. It started
Why high bandwidth matters. Traditional DRAM was never designed for the type of workloads AI systems are running today. AI clusters need to move enormous amounts of data extremely quickly, and that is why companies are shifting towards HBM. HBM stands for high bandwidth memory, as before, instead of sitting far away from the GPUs like traditional memory systems. HBM is stacked vertically and placed extremely close to the processor. That allows data to move significantly faster while also improving efficiency. And the bandwidth difference is massive. Modern AI accelerators are now relying on HBM stacks capable of delivering multiple terabytes per second of bandwidth. That is becoming critical for training large AI models running inference at scale. This is one reason companies like Micron, Samsung, and SK Hynix have become so important to the AI ecosystem. because the AI race is no longer just about building faster GPUs. It's also about feeding those GPUs fast enough. And the projections here are enormous. The global HBM market is projected to grow rapidly over the next several years as hyperscalers continue building AI infrastructure at scale. Some analysts expect HBM market to grow multiple times larger by the end of the decade as AI servers require dramatically more memory capacity and bandwidth. And that creates another major problem because building these advanced memory systems is becoming incredibly difficult. One of the biggest hidden bottlenecks in AI right now is advanced packaging, and most retail investors barely talk about it. As AI chips become more powerful, semiconductor companies are stacking memory vertically, shrinking distances between components, and trying to move larger amounts of data faster than ever before. But this dramatically increases complexity. These chips are no longer simply sitting beside each other on a board. They are becoming tightly integrated systems with massive thermal density and extremely difficult manufacturing requirements. This is where technologies like COWOS become critical. COWOS, developed by TSMC, is an advanced packaging technology used heavily in AI accelerators and HBM integration. And demand for COWOS capacity has surged because AI infrastructure spending has exploded. TSMC recently projected the semiconductor industry could exceed $1.5 trillion by 2030, with AI and high performance computing expected to account for roughly 55% of the market. In the advanced semiconductor packaging market itself, it's expected to grow roughly $37 billion in 2026 to more than $95 billion in 2035 as AI infrastructure demand accelerates globally. Some AI focused packaging segments tied directly to AI accelerators are projected to grow even faster over the next several years. That matters because packaging capacity cannot expand overnight. Yield challenges become harder, thermal management becomes harder, inspection becomes harder. And as AI chips continue scaling, advanced packaging may become one of the most important parts of the semiconductor supply chain, which brings us to some of the companies connected to this ecosystem. And before we get into the companies, remember this is not financial advice. These companies connected to the AI memory packaging and semiconductor infrastructure ecosystem, and the bigger trend here is enormous. This is not just a memory story, it's a memory packaging, inspection, and process control story. The first company we're talking about today is Micron Technology, trading at $776 as of May 14th today. Earnings per share is at $21. The price per earnings ratio is at 37.37, slightly high.
Set to report earnings in what marks the next test for artificial intelligence demand. But what exactly does Micron do? It's a memory chip maker, and it's one of the best performing chip stocks this year. Founded in 1978 and headquartered in Boise, Idaho, Micron has grown into a global leader in DRAM. The company's growth is being fueled by high bandwidth memory, also known as HBM. That consists of bundles of DRAM chips, which are closely connected to processors from NVIDIA and vital for AI computing. Now, what's DRAM? Well, that stands for Dynamic Random Access Memory. It's a specific type of RAM, or random access memory. All computers have RAM. DRAM is one kind that we see in modern desktops and laptops. Its main competitors in that DRAM segment, Samsung Electronics and SK Hynix, both of them are based in South Korea. Micron plans to expand in the U.S., announcing in June it will spend about $200 billion on U.S. manufacturing and research and development. The R&D spend, along with strategic partnerships, have positioned it as a key player in the semiconductor space.
Micron is probably the most direct U.S. listed memory play tied to this trend. The company produces DRAM NAND, and increasingly important HBM products used in AI accelerators. And management has recently talked about record revenue and extremely strong AI-driven demand for HBM. That matters because every major AI company now needs more memory bandwidth, and many analysts expect HBM demand to continue growing aggressively over the next several years as AI clusters scale larger. The bull case, if HBM demand remains tight and hyperscalers continue building massive AI clusters, Micron could continue benefiting from strong pricing power and rising AI memory demand. The company could also benefit if AI servers continue requiring significantly more HBM per GPU generation. The bear case, memory is historically cyclical, and if supply catches up too quickly, pricing weakens or AI infrastructure spending slows, and margins could come under pressure again. Micron is profitable again during this AI memory cycle, but investors should understand the memory industry could be volatile. The second company is Camtek, trading at $171.36 today. Price per earnings ratio is 165.89. Earnings per share is $1.02. So it's a little high at 165. I would say that's significantly high. Probably want to be in 20 to 30 range. Camtek is one of the more interesting hidden infrastructure plays in this ecosystem. The company focuses on semiconductor inspection and metrology. As advanced packaging becomes more complicated, inspection systems become increasingly important because manufacturers need to detect defects, improve yields, and maintain reliability across extremely dense AI chips. In simple terms, Camtek has recently reported the more complicated chips become, the more important inspection becomes. Camtek has recently reported strong revenue growth and profitability, while management expects continued growth tied to advanced packaging demand. For the bull case, if HBM chiplets and advanced AI packaging continue scaling rapidly, demand for inspection systems could continue rising for years. And because advanced packaging complexity is increasing, companies like Camtek may become more important to maintaining manufacturing yields. The bear case is that semiconductor equipment companies can still be cyclical. If the AI spending cycle slows or semiconductor demand weakens, equipment spending could become volatile, and the stock has already had strong performance over the past few years. Still, this is one of the less talked about AI infrastructure companies tied to the packaging ecosystem. The third company is Onto Innovation, trading at $277.28 today. Price per earnings ratio is a little high, 128.94. Earnings per share is at $2.15.
The silicon chip, portable, powerful, a wealth of possibilities and the backbone of modern technology. In the last half century, we've built a whole world around this small, deceivingly mighty object, connecting us to people, places, knowledge, and nearly everything we do. It makes our everyday lives possible. But zoom in close enough, and we see this tiny, seemingly simple object is a complex network of structures and materials. And the designs and packaging only grow in complexity as our world gets more connected. That's what we don't see when we think about the power of microchips, the material complexity, the coordination challenges during fabrication, and a disconnected data sharing ecosystem struggling to trace defects and improve yields. But it doesn't have to be that way. Together, we can intelligently bridge the gaps between fabrication and advanced packaging processes, centralizing everything that brings this chip to life. That's smarter factories driven by Onto's AI, innovative engineering for superior precision, and a true connected partnership across the supply chain that focuses on solving complex problems with actionable information. It begins with leading-edge optics generating the most accurate data sources for measurement, inspection, and imaging. And it leads to connected software solutions, leveraging analytics, and generating outcomes that support development and manufacturing of the highest quality chips in the world. That is, we can connect manufacturing to the world enabled and empowered by this small but mighty chip.
Onto Innovation is another process control and inspection company tied to advanced semiconductor manufacturing. The company has exposure to advanced packaging, process control, memory manufacturing, and AI semiconductor production. As packaging architectures become more advanced, companies like Onto may become increasingly important to maintaining yields and manufacturing efficiency. The bull case is if advanced packaging becomes a long-term AI bottleneck, Onto could continue benefiting from demand across memory, process control, and semiconductor manufacturing. And if the semiconductor industry continues shifting towards increasingly dense AI architectures, process control may become even more important over time. The bear case is margins have recently faced pressure, and semiconductor equipment demand can fluctuate with industry cycles. But the company remains profitable and deeply connected to several AI infrastructure trends. Again, these are not necessarily the flashy AI names most retail investors focus on, but they are connected to the infrastructure behind the AI expansion cycle. And that infrastructure is becoming more important every quarter. The AI race is evolving. At first, it was compute, then it became about power, then networking. Now it's memory, packaging, and bandwidth are becoming major constraints as well. And this may only become more important as AI factories continue scaling globally, because building AI systems is no longer just about designing a powerful chip. It's about supporting the entire infrastructure ecosystem around that chip. You got power, cooling, networking, optics, memory, and packaging. And every new bottleneck creates new winners. And the next phase of AI may not be determined only by who builds the smartest model, but by who can physically support the infrastructure behind it. And that is why the semiconductor ecosystem surrounding AI may become one of the most important investment themes over the next several years. Because the AI industry is no longer just about building software, it's about building physical infrastructure at enormous scale. And memory may be becoming one of the next major battlegrounds. So let me know in the comments which AI bottleneck you think becomes the biggest over the next few years. Is it power, cooling, networking, memory, or is it going to be something else that we don't even know about yet? If you enjoy these type of infrastructure AI breakdowns, make sure to like and subscribe. And also check out the Buy Me a Coffee membership if you want access to portfolio updates. You want the visuals from today's video, they'll be in the membership, and deeper AI infrastructure breakdowns as well. So thanks for watching, and we'll see you in the next one.